Hi guys, welcome to the honeystocks.com special Memorial Weekend analysis, and this is going to be an analysis of what you can expect to see in the stock market perhaps next week when we open up again on Tuesday. And as always, before I get into this, please pause the video, give that a quick read. Now, if this is your first time here, what I like to do every so often is for social media, I like to just throw out maybe around 15, 20 stocks, 20 charts that I think everybody should be aware of for the forthcoming week. And I think what will be apparent if this is your first time here, if you're not familiar with what I do in my work, I think the charting that you're going to observe will show very clear entries into the market. But the one thing that I need to say is with the charting that I have a philosophy that's built upon less is more. I don't like to condense my chart with a lot of indicators that I might not perhaps be using on any given chart. So the charts are very, very clean, but there's a lot going on in the background. But it all comes down to my philosophy upon optimal entries into the market. Now, who is this for? This might be for those of you that maybe lack a bit of discipline in your trading. It might also be for some of you that stare at your broker account in that fashion on a daily basis. So hopefully by the end of this analysis, it gives you some food for thought, and hopefully we can start to maybe get you on a better path. And if you do like the video, please like my video on YouTube, subscribe to my channel, comment, share. It's all appreciated. And rather than me rambling on, I think it's probably best that I just get started. So I think first up, I've had a few messages about this today about Splunk Inc. Now, we had earnings, and lo and behold, we've had a huge drop. Now, certainly there appears to be a bit of a bounce towards the end of play today. I think as I record this webinar analysis presentation, whatever you want to call it, there's still around 20 minutes left to go in the session, but it does certainly appear like there's been a bit of a bounce here towards the end. So I think certainly, with Splunk, bearish below the 200 SMA, but if we get continuation on Tuesday, then that might well be the catalyst to take advantage of a potential earnings discount. Next up, we've got Coupa Software. Now, again, this is a chart that I'm sure most of you are familiar with. The one thing I need to caution is we have earnings coming up on the 3rd of June. The stock is obviously up a huge amount this year, but my guys got an alert for this at $100. We've obviously had a bit of a rise. It got as high as 116. We've had a bit of a drop the last couple of days to 112. So for me, given that the stock is trending, depending again upon the overall market and what we see in the overall market come next week, then that pullback might well be offering opportunity. I will be touching on the overall market, in the next 10 minutes. So certainly, that's my view on Coupa at the moment. Next up, we've got Planet Fitness. Again, it's up 60% this year. We cannot complain. If you've been in Planet Fitness, with options, if you've been in and out, whatever your deal is, it's probably done well for you. I feel like this pullback on the back of positive earnings is probably offering a good entry into the market, provided the market plays ball. So certainly I think Planet Fitness needs to be on everybody's radar. Next up, we've got Zscaler. Now, again, we've got earnings coming up next week. It's up nearly 100% this year. So I think for new entries into the market, although this would be a good setup, I think given that we have earnings, you should have some sort of rule in place that says that you will only hold through earnings if you're, a certain percentage in profit. So I think for new entries, it doesn't make a lot of sense. But if it's a stock that you've been in for a while, then absolutely it's valid to hold through earnings if you're in good profit. But I think new entries, given that we know that with earnings season, we can still have good reported earnings, we can still have good guidance, but Wall Street will still tank the stock for no good reason. So absolutely caution. I do like the stock. Yes, it would normally offer entry, but given that we have earnings coming up on the 30th of May, I suppose the word of the day is probably caution. Next up, we've got Salesforce. Again, we're trading in this range at the moment. Certainly, if we are within this range at the lower end, it would normally offer a bit of opportunity. I think it's very, very clear. I think all bets are off if you drop below 150. I think that's the point that I would say, okay, I've got it wrong. Again, we've got earnings coming up. The stock is only up 20% this year. It's not been a massive performer, when you compare it to, some of the other stocks that I'm going to be talking about. So certainly, Salesforce, it might well represent a decent little swing trade if the market plays ball. Next up, we've got American Airlines. Now, because the market is obviously on a bit of a knife edge, it's very news driven at the moment. There's a lot of negativity, Trump, trade wars, you know the story by now. So there are a few short opportunities that I'm going to be highlighting today as well. And one of those is American Airlines. It's very, very clear. We have broken support. It looks like we've got a little bit of continuation follow through today. So if that continues next week and the market keeps declining, then absolutely, there would be a very clear target in place for it to move towards $25. So I think American Airlines, if it's not on your watch list, then you might want to add it. I get that shorting isn't for everybody, but for me, I just trade in the direction of price. I'm not a value investor. I'm not a fundamental guy, but I'm certainly looking to take advantage of what price is telling me. Next up, we've got Smartsheet. Again, earnings 5th of June. This is up 100% this year, which is incredible. We've just broken out now. Again, there is a reasonable expectation that you could make that it should start to move through the levels. We've got a very clear support level in place. So, yeah, hopefully the market plays ball and we get a bit of continuation. But I think Smartsheet will certainly represent opportunity. American Waterworks. Now, for those of you that are maybe looking to get a little bit defensive, you don't need to short the market. There are other areas of the market that you can look to exploit. For example, the XLU has broken out, which is the utility sector, and this is one of the components within that sector. So it stands to reason that one of the top performers in that sector would continue to perform, provided the XLU keeps on performing also. So certainly it does have the look of being a little bit overextended at the moment. Certainly when you look at the other technical indicators, there's a lot to consider. So there is an expectation that we might get a little bit of a pullback, but I think that pullback might well represent opportunity for a pullback entry. So if AWK is not on your radar at the moment, I think you should maybe add it to your watch list. Apple. I've had a lot of messages about this week and whether or not I feel like it's a stock that we should be looking to take advantage of the dip. The simple answer is no. Obviously, we had a huge run this year in Apple. It was great. It looked like it was going to go and test the highs at 230. Absolutely, trade war news, etc. Earnings, we've just started to break down, and when we've broke down, these little bounces are short-lived. They're just meeting resistance where you would expect it to meet resistance, and it's falling away. So the danger with Apple at the moment is it's a bit of a falling knife. If you choose to jump in here, I think it represents a bit of a gamble. Just my 2 cents on it. And obviously Apple's a great company. I own lots of their products. But certainly when we look at price, when we look at what the technicals are telling us and what the price action is telling us, price action is down. So I'm not going to be buying the weakness in Apple. yeah, there's a danger that this could drop a little bit further, especially when you look left on the chart and you see what what happened last year with it. I think that that's certainly the danger. Next up, we have MongoDB, MDB. Earnings 5th of June, up 100% this year, which is incredible. But yeah, we've kind of broken out here of this. I would class that more of a symmetrical triangle. Good little breakout, little pullback. I think the pullback might well be offering opportunity, but certainly I think if we break below this level here, this trend line, then that probably wouldn't be good news for MDB. So I think it's one of those that certainly add to the watch list. If the market plays ball, and MDB might be one of those that continues on its merry way. But yeah, we'll see what happens on Tuesday. But absolutely add this to your watch list if it's not already on there. And just to maybe reiterate what I was saying it before. If you are enjoying this, please subscribe to us on YouTube, share, like, comment, the whole deal. Yeah, I'd really appreciate it. So next up, we've got Micron Technology. Again, this is one of those potential short opportunities. Earnings 19th of June. It's certainly, declining in price. So I'm not going to be buying the stock. It was actually a stock I was looking to potentially buy when we had this failed move. Certainly, that failed move, we just got an immediate rejection, so it wasn't appealing. It just continued to decline, and it's just showing a lot of weakness at the moment. The next logical area of support is around $29. Price seems to be working its way towards that. Now, will we get a bounce there? Possibly. But absolutely, if you're looking for a new entry into the market, certainly you could look to short it here. And equally as well, any sort of bounce to the upside will probably be met with another rejection. So again, I think MU on a technical level, it doesn't look too great. Again, I'm not a value investor. I'm not looking too much at the fundamentals of it. I probably have a 90% technical, 10% fundamental view in the market and the stocks. So yeah, I think MU is one that you should be looking at. Next up, we've got Ball Corp. It's up 55% this year. We've had a bit of a pullback with the overall market recently, but again, this may well be offering opportunity for those of you that want to get in on a good performer. It's steady. There's nothing terribly exciting about the stock, but if you look at where it's risen from since the end of last year, it's been a huge rise. So I think absolutely, if Ball Corp isn't on your radar, then I think you should add it to your watch list. TWLO, I've said this 100 times now, the chart is better looking than Mila Kunis, and yeah, it's respecting technical levels, which is what we want. We've had a bit of a pullback with the overall market, but again, if the overall market continues to play ball, which I'm just about to talk about in a second, then absolutely, I think TWLO is offering opportunity. Now, just when I'm talking about the overall market, what I'm really looking at is there's quite a lot of charts that I look at when I'm assessing the overall market. There's a couple that I pay attention more than others, absolutely. But I think SPY is obviously one of those that just makes sense that we should be looking to just keep an eye on it. Now, I'm being asked at the moment, especially, from social media messages, etc., where myself and my clients, community, etc., will be looking to short the market. I'm very clear on this. I think last year, I think those of you that follow my work religiously, you're obviously subscribed to my email list, etc. You all understand where I'm coming from and just why I have the philosophy that I do. But I think the danger is dropping below the 280 level. I think that's one. I think if we drop below the 200 MA with strong continuation, I think that would be the catalyst for shorting the market, at which point you just look to go and perhaps short the individual stocks that are showing weakness. and maybe you want to short the ETFs, whatever your deal is. But I think you would see me switching from a bullish stance to a bearish stance in the event that we have a complete meltdown in the S&P 500. And I think this is the very logical level that we need to be careful of and we need to watch here. So yeah, absolutely keep an eye on the S&P 500, because if the S&P 500 fails and it starts to break down, all your stocks are going to break down as well. It doesn't matter how good your company is. It doesn't matter what the technicals of the individual stocks tell us from a bullish perspective. If the S&P fails, your stock's going down. So absolutely keep an eye on that. Next up, we've got Avis Budget Group. Now, certainly, again, this is one of those that's showing a bit of weakness. Myself and a few of my guys were shorting this last year to good effect. And yeah, it's showing weakness again. We've just moved into a bearish environment for it. So yeah, I think any bounce to the upside would be logical. And I think similar to MU, it's likely to be met with a rejection followed by a decline. So I think Avis might well offer opportunity for those of you that are looking to short the stock there. Next up, we've got Shopify. Now, yeah, it's obviously a huge run this year. Incredible. Congrats. I have some of my clients have bought houses on the back of this, which is incredible. And yeah, I love the stock as well. The danger is we're getting a bit of a bearish signal at the moment now. Obviously, technicals are a bit of a self-fulfilling prophecy. It relies on many factors. However, we have declining momentum within Shopify. So, word of warning to those of you that are in Shopify at the moment. Yes, I would love to see this go and hammer and get through $300 just as much as you do, especially if you're holding it. But if you're a technical trader and you have a mid-term time horizon, which means are you holding the trade for weeks, possibly months, then it might be a case of just paying closer attention to your management of the trade. Just my 2 cents on it. Obviously, do your own due diligence, etc. But yeah, certainly Shopify at the moment, a little bit of caution. It's massively overextended at the moment, and there is a signal that says that we might get a little bit of a decline here. Next up, we have Team Atlassian Corp PLC. So for those of you that don't know, I got myself, my clients in on this stock at $90, started to move sideways. Then we had another earnings play discount, got quite a few of them in at $100. It's obviously motoring, it's still moving. So with a trade like this, it's obviously looking like it might be a bit overextended. Again, the overall market is absolutely going to play a part in what happens next with Team. But we are looking at a bullish chart. So the hope and the expectation is that this just slowly grinds away and just starts to move towards 140 now. It's obviously blasted through the levels. It's up 55% now this year. So absolutely, it's one of those that if you're in the trade, then it just requires management. A new entry at the moment is a little bit tricky, I have to say, on a technical level. So yeah, it's obviously moving very well, and I hope to see this move towards 150 along with the overall market. Now, next up we've got eHealth. Now, we've had a breakout here, and I've seen this one floating about on social media. And yes, I like the stock as well. It's obviously up 80% this year. But for me, the new entry into this stock is above $70 on any potential breakout. I think above $70, then obviously you need to weigh up, what would represent a strong, high probability breakout. And obviously there's quite a few technical tools that you need to be aware of. But I think certainly with $70, I think setting a price alert there is logical. Yes, we've we've had a bit of a breakout here, but it's fallen away the last 2 days. So yeah, for me, it just makes sense to set the alert for $70 and then, potentially revisit it then. Tesla, good old Tesla. Now, this might be the one stock that I think a lot of you out there, especially if you've come through from, a social media post, etc., want to, get a handle on it. Now, we all know it's a very volatile stock. It's up and down. I love Elon as well. I love what he does. I love everything that he's stands for. But at the end of the day, the stock is breaking down. Now, I'm not talking about value. I'm not talking about fundamentals again. I'm looking at it from purely a price perspective. Yes, hindsight's wonderful. I posted a chart to social media here, just saying, look, this is bad, it's breaking down. Lo and behold, we got a breakdown. Now, this is just a chart I just wouldn't trade. It's too volatile intraday, etc. So it's not a chart that I want to get involved with, but I get a lot of requests for it. When you look left on the chart, this is a very logical area of support. So yes, we've got a little bit of a bounce from that support. What is likely to happen here is it's likely to have a bit of a rally just because that's what Tesla does, and probably another fall away. So I think if you're looking for a new entry into Tesla, then I think you can probably set a price alert for maybe something like 175 if you're looking to short it. I'm not going to be jumping in on this and trying to day trade it, and it's too risky. And I think if you are day trading Tesla, you probably mostly lose. But absolutely, if you have a mid-term time horizon, which is what I have, then I think being sensible. I think below 175 is the way to go there. And yeah, we've also got Nvidia. Now, Nvidia broke down, and it's obviously started to move as you would expect. I think the next logical level here, I think it's around 130. That is going to be the next test. Potentially you might get a bounce, and then you could look to take advantage to the upside, or certainly a break below that level, and it would be a valid short. It's obviously had a huge decline, but the one thing that I do have to say is it is still up this year. It's up 11% this year. So, where it goes from here is anybody's guess. But yeah, it doesn't show signs of bullishness at the moment. I think that's the message here. Yes, 11% this year. You could argue that it's bullish, but you can clearly see from the chart that that's starting to break down. So yeah, I think it's going to be logical to see what happens here. I think it's maybe actually around $125, if memory serves me correctly. So I think Nvidia is one of those that absolutely keep an eye on it, set your price alerts, add it to your watch lists, and yeah, we'll see what happens, from there on. So, with that said, I think, some of you may have been watching this and maybe thinking, what the hell is this? As I said, right at the start, I like to keep things simple. I don't believe in complicating charts. I like to remove a lot of the indicators just to make things super clean and easy to understand, and that's really my trading philosophy. I understand that the path to success in the stock market is a difficult one, but I think from my perspective, I think since I simplified my process and removed a lot of the noise, that translated into results. So I think maybe some of the questions that you might want to ask yourself, how much happier would your life be if you could cut out all the noise and just make good decisions in your trading? If you didn't feel like you were at the mercy of the stock market, how would you feel about that as well? And if you were able to build your own trading plan and have your own rule set for the rest of your life and not copy other people, how would you feel about that as well? So what I do at honeystocks.com is I have an education platform, and within that education platform, I provide quite a few trade ideas, lots of charts, etc. And for 2019, every single chart that I produce and provide my client group is logged on my website for complete and open transparency. So these are the charts that I have posted to my group this year. You can obviously have a look and see what sort of returns, etc., what all the charts have done. I've also got 2018 logged on my website. So again, feel free to go and check all that out. So certainly that's part of what I do. I understand that it's very frustrating as a trader, especially if you're inconsistent and maybe if you are learning at the moment. I know that it can take a couple of years to learn the game. I know that a lot of you will be learning from losses, especially at the moment, and quite a few of you will be learning from YouTube and learning from books. And ultimately, and the frustrating thing is a lot of you will end up saying that to the market, and it really doesn't have to be that way. And I think myself, I believe in making a difference. You can go onto our website and have a look at our testimonials. You can see what it is that we do. All of the individuals on my website are all part of my client group, client community, etc. So I think if you are somebody out there that is struggling, if you're somebody that does want to make a change and you want to just completely up your game, you can ask yourself if you want to keep doing it the old way or if you want to learn it a new way. And if you decide that you want to explore learning a new style, then absolutely there's an option for you. You can jump onto our website, honeystocks.com. All you need to do is just click on apply. Just choose a time. Give me a little bit of background. Tell me what it is that you struggle with, and we'll have a conversation for 20 minutes. Super informal. I'm super relaxed. There's no pressure. If I can help you in some way on the phone, then I will do that for you. But it's very, very simple. It's very, very straightforward. And like I said, it just starts with selecting the time. I have opened up my calendar for the next 4 days because of the Memorial Weekend special. So if you are somebody that wants to make a change, if you are somebody that is struggling, then feel free to select a time that suits you. The only downside is at the moment, I am no longer on the US time zone. I am back in the UK at the moment. I will be back on US time zone very, very soon. But at the moment, I'm back in the UK. So yeah, select a time. The appointment calendar is completely open at the moment. So if you are somebody that stuck around to the end, thank you very much from the bottom of my heart. Thank you for watching, and I hope to speak to you soon. Thanks.